Warren Buffett's investment giant has dumped Visa and Mastercard stocks while acquiring shares of Nubank. Wait, what is Nubank? Nubank is a Brazilian banking organization that serves cryptocurrency. Well, you might have known Warren Buffett as one of the most prominent investors in America that does not support the crypto industry. In 2018, he was one of the firsts who called Bitcoin rat poison squared, and was one of the few critics not to reverse their opinion on the asset. But later on, Warren Buffett's Berkshire Hathaway has been reported to start supporting Bitcoin. Recent reports claim the investment company made a few changes to their portfolio in response to the growing financial industry, which could be interpreted as an acceptance of it. So what changed Warren's mind? Luckily for you, Crypto Clipper, we've covered for you the story about Warren Buffett's $1 billion worth of stocks bought from crypto bank, Nubank. Remember that while the first step is completing any of these amazing videos, the second and possibly more important step is taking action, even if it's imperfect action. Berkshire has maintained its strong position in the banking industry, but it has also began to invest in a Brazilian company called Nubank. Berkshire ultimately bought $1 billion worth of Nubank's shares in Q4 of 2021 after investing $500 billion in it in June of 2021 through a series of G funding round. This Brazilian online banking service, Nubank, does allow its customers to invest in crypto-related ETFs, as its investment unit, Nulvest, allows customers to invest in digital assets, ETFs. As of now, Berkshire Hathaway has dumped $1.8 billion worth of Visa stocks and $1.3 billion worth of Mastercard stocks. Buffett's Berkshire Hathaway partner, Charlie Munger, is also the critic who wishes that digital assets never existed. Nubank, the fastest growing startup in Latin America, is also growing faster than expected in Mexico. Nubank's chief executive David Vélez said that the company's growth in Mexico definitely exceeded their expectations in an interview. We thought it would be hard to beat the growth we had in Brazil and Mexico, and we now see Mexican ops beating Brazil metrics. Being one of the world's largest online banks, Nubank has launched the ability to make transactions with cryptocurrencies. The bank has more than 1 million companies and 54 million users. The bank started its new development vector with two of the most popular cryptocurrencies, Bitcoin and Ethereum. To buy coins, the customer only needs to enter Nubank's app and make a transaction, having paid the purchase amount and a small commission of about 0.02%. Nubank said that limiting their offers to Bitcoin and Ethereum would give customers a safer way to enter the market. Together, these two currencies make up 60% of the entire crypto market. Nubank is a very popular digital bank and is one of the most expensive banks in the world. Nubank gained this status when it went public in early 2021 and was valued for $45 billion. This financial institution and company, which accepts cryptocurrency, is very well founded, having some of the world's largest banks fund investing in it, and is worth recruiting if you are a business looking to adopt crypto. Warren Buffett having investments in Nubank means it is praiseworthy and prestigious. Brazil's government has taken a more liberal stance on cryptocurrencies in Brazil. On June 15, a bill was introduced to recognize cryptocurrency as a means of payment so that it could be legal. This included companies who are currently accepting cryptocurrencies for their products and services, such as soccer clubs conducting initial public offerings with their own tokens. In just over 2 years, New Mexico has served 2.1 million customers, which is equivalent to 2.2% of the country's population. After 9 years, Nubank is expected to have reached 53.9 million customers, or 30% of the adult population. According to the CEO of Nubank, it took them 18 months to become the largest issuer of new cards in Mexico. But it took 5 years or even longer for Brazil to achieve this position. According to a survey by Comisión Nacional Bancaria y de Valores, Mexico's financial market is less competitive than Brazil's because only 10% Mexicans have access to credit cards and can take advantage of the country's lower lending rates. Now, the fintech backed by large investors such as Berkshire Hathaway and SoftBank Group Corp wants to accelerate growth in Mexico with a $650 million loan in order to expand their international activities. There is a huge market opportunity in the country, he said. This is disappointing, Nubank CEO said, of a drop in his company's share price. He mentioned that the market for tech companies has shrunk and competition has decreased, encouraging investments on the Nubank side to play catch up. He also noted his company is involved in several conversations that could result in acquisitions. The Nubank CEO is not worried about the rise in delinquencies because they were artificially low during the pandemic. Nubank has more deposits than credit, with an even riskier balance of 4 times that. The company still has a large cash position from their $2.8 billion IPO. The Warren Buffett-backed fintech announced a feature which would be phased into the interface in May, now that it has received approval from all of the government regulators, and they will be rolling out this feature. The blog post was updated on Monday to reflect the new status. Customers can now negotiate cryptocurrency from the Nubank Crypto tab. The option to buy cryptocurrencies through Nubank is now available to all our customers. Update your app. The updated blog post reads, Bitcoin Magazine tested the new feature on Tuesday. The small fee ranges from 0.02%, and in addition, the app provides educational content teaching newcomers about Bitcoin and its various aspects. Nubank's app has a crypto section where customers can buy and sell Bitcoin, with the exception of withdrawing them to an external wallet. Despite this restriction, Brazilians use Nubank more than any other payment platform. Bitcoin is actually the first cryptocurrency created and is different from other currencies because it was designed with the intention of decentralizing the financial system. Bitcoin has influenced all cryptocurrencies since then, with many people thinking of it as a powerful investment. The most popular bank in Brazil, Nubank, is backed by Warren Buffett and went public on the Nasdaq recently. According to CNBC, Nubank was invested for $500 million in 2021. 30 million shares of the company were purchased for $250 million as it went public in December. Recently, the company doubled down with a $1 billion investment in Brazilian fintech. In the last few years, there has been an increase in banks offering cryptocurrency services, from neobanks like Nubank to traditional banks such as Itaú Unibanco. Nubank joined this race due to competition from other players in the banking system and companies in the finance industry to provide better Bitcoin-related services for Brazilian customers. Investment banks such as BTG, Pactual, and XP Investimentos have also increased their Bitcoin service offerings during this time. Brazil's House of Representatives is set to vote on the overhaul cryptocurrency draft bill in the coming weeks. This bill will include new rules for exchanges and custodians regarding cryptocurrency in the country. How to invest like Warren Buffett. Warren Buffett looks for companies with a monopoly of resources that are difficult to reproduce by other companies. He values these intangibles and sees the real value in the company. One of the world's most successful investors is Warren Buffett. He is publicly traded with a holding company called Berkshire Hathaway. Buffett views the underlying business as providing some margin of protection for the investor. If the business is mediocre, then it will do poorly with the stock that is purchased cheaply. But if you have an investment in a company that's successful and growing at an economical price, your investment can experience value growth along with the business. Warren Buffett's investment approach can be gleaned by reading his work, as well as analyzing the holdings of Berkshire Hathaway. Mary Buffett and David Clark have collaborated to write Buffettology, the previously unexplained techniques that have made Warren Buffett the world's most famous investor. A book that discusses his techniques in an interesting and methodological fashion. Buffett's rationale for success investment is that it's first and foremost about the business. Value to the owner comes from the company's ability to generate earnings at an increasing rate each year. He seeks first to identify an excellent business and then to acquire the firm if the price is right. In his view, businesses can be divided into two basic types. Commodity-based firms. In highly competitive markets, the cost is a key purchasing decision for consumers. These industries typically include oil and gas companies, the lumber industry, and raw food producers such as corn and rice. Buffett typically avoid these commodity-based firms. Consumer monopolies. As a result of the lack of competition, monopolies can provide outstanding products or services at a much higher cost. While Buffett typically passes up the stocks of commodity-based firms when prices are below intrinsic value, these companies will still remain bad. The stock of a mediocre business, even if it briefly is at an affordable price, is still not worth the investment. Buffett seeks out consumer monopolies so that he can invest in them. These are companies that have managed to create a product or service that is somehow unique and difficult to reproduce by competitors, either due to brand name loyalty, a particular niche that only a limited number of companies can enter, or an unregulated but legal monopoly such as a patent. Warren Buffett identified three types of monopolies that can be profitable for companies. The three types of businesses that sell products, those that sell services, and those with government approval or concession. 1. Any businesses who need to put up with companies that produce products that wear out quickly or are steadily used up no matter how popular the brand may be. These products are essential to the business and need to be carried by other venues, such as stores and restaurants. The best example of this is Coca-Cola. While they're a master brand and an essential purchase in grocery stores and other places, they always have within themselves the ability to last forever. Other examples of these types of products include drug companies with patents or even popular brand name restaurants such as McDonald's. Number 2. Communication firms provide services that businesses use to reach customers. All businesses need to advertise in order to get potential customers' attention. Traditionally, telecommunications network and platforms such as Facebook and Google are in this category. Number 3. Businesses can provide services that always require attention from customers. These types of companies usually don't need a lot of equipment, like lawn care service, for example. In order to find consumer monopolies, investors should find products with high profit margins. Products that have no effective competitors, either due to a patent or a brand name, will have higher profit margins. To evaluate whether a product is in this category, look for companies whose operating margin and net profit margin are above the industry norm. To understand these companies, you need to have knowledge of the industry and a general understanding of what the company does. However, if you are in an industry that you know well, like Warren Buffett, who is in the investment world, it is best to only invest in ones in your area of expertise. It's fine to borrow money if you're doing it for a specific purpose. If a company is borrowing money to purchase another company, then they're buying a monopoly and pay back the debt with a greater cash flow. But if you're going into a commodity business where margins are low, then you might need to reconsider this use of debt. All's Buffettology approach seeks out companies with less debt relative to assets by measuring their relative liabilities. Debt levels for each industry can vary, but the total liability to assets ratio is more encompassing than a ratio based off just one type of debt, like long-term debt. Warren Buffett invests in companies that have predictable earnings, which produces cash that can be reinvested or paid out to shareholders. Earnings levels are critical in valuation, and when earnings increase, the stock price will eventually reflect this growth. Whenever Warren Buffett looks at a company, he is most interested in the long-term growth. The first screen to go through is AAI's Buffettology screen, which requires that a company's 7-year earnings growth rate be higher than 75% of all the companies on their list. The company must also have an upward trend in earnings. Buffett compares the company's latest 3-year earnings growth to its 10-year growth rate and selects companies that are seeing demand from investors. The next filter is required after looking at a company's recent 3-year earnings growth. Due diligence for the future will be done by examining a company's 7-year earnings growth. When evaluating the earnings of a company, an investor will look at both its strong and consistent earnings as well as any wild swings in its earnings. These swings can be a characteristic of commodity businesses. When performing an examination year by year to see whether or not the company has been stable, this information is important. Before investing in a company, check their expansion. The pattern of acquisition and new direction should fit the company's primary range of operation. Fidelity Magellan manager Peter Lynch termed these diversifications. Warren Buffett likes for firms to reinvest the earnings in their company so long as profitable opportunities exist. Buffett favors shareholder-enhancing maneuvers such as share buybacks when companies have excess cash flow. When a company repurchases its own shares, this boosts per-share earnings and prices, which can have a long-term effect on the stock price. Buffett looks at how managers used retained earnings to judge their ability. A company should retain its earnings if it is able to generate a return on investment or ROI that is greater than the amount an outside investor could earn. When a company pays dividends, they should only do so if they would be better off putting that money to use elsewhere. If you reinvest those earnings right back into the company, the business is more successful and the stock will also rise. An average return on equity above 12% means the company is making money. Buffettology filters for companies with an average return on equity that's historically been way above the current level. But a company that meets this requirement isn't automatically a buy either. It must also meet another filter, which requires it to have an income in the last 7 years that remains higher than 12%. And that's it for this video, Crypto Clipper. Remember to subscribe to our channel, and if you feel like we've delivered value, please share this video with one person. That's right, just one person as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your own fortune. Remember, you can watch video after video, but it isn't until you actually take action that you'll start to see results. See you soon!